Let's connect then with Sandip Sabharwal as well, who's with us on the show. Sandeep, I'm sure it was a huge disappointment, although our men in blue did give us a terrific run up until yesterday. But that aside, the markets have been quite the opposite because it's been record highs for the frontline indices and the broader markets putting on a great show.
That's true. Unfortunately, in sports, ultimately there has to be only one winner, and that's the sort of unfortunate part of sports. So I've seen that with my daughter a lot. So ultimately, but then the sportsmen recover very fast, and I think we also have to get through it fast enough. Overall, on the markets, I think markets are doing reasonably well. I believe they'll continue to do well as concerns around inflation, interest rates continue to abate. And what we need to realize is that this year emerging markets have seen huge outflows driven by China concerns. Now, the Indian markets have held up very well despite foreign fund outflows. In 2024, I expect it to be a good year for inflows overall. So I think we'll see that a lot of pockets of large caps, etc., might also start performing as we go into next year.
Will be the importance of state election outcome, Sandeep, because it's a matter of maybe few days and then everybody will start talking about it. And in a sense, it's cricket terminology, so everyone would say, okay, this is the semi-final which will tell you what will happen in 2024.
First of all, Nikunj, as we realized in the Cricket World Cup, the semi-finals tell nothing about the finals. So I think that's how these elections are also there. Now, on the election outcome results and its impact, it will be forgotten in one day. They don't matter. State election don't matter for the markets. It's been proven historically. And if for some reason some people get disappointed and sell off, it will be an opportunity to buy for the investors.
Sandeep, very well said, I would say. Very little impact of semi-finals and finals. But let's talk about select stocks which you look at very carefully. SBI is one of them. And there is no doubt the way fundamentals are shaping up last few quarters. But market appeared nervous about this, RBI corrective measure and punished the stock by 4%. We spoke to the management who was in London doing a roadshow, and they did say that they are adequately covered, but have taken a board nod for further capital raise, CET, if required going forward. Do you think it's getting back into a comfortable zone to get back into SBI around 550 or so?
Yeah, it could be because of the fact that if bond yields peak out and we see some rally out there, so then PSU banks tend to be beneficiaries of that. The only concern has been that SBI has been growing too aggressively relative to its historical growth rates vis-a-vis the overall market growth. And that is raising some concerns in the minds of investors and traders whether they are taking excessive risk and the NPA cycle will return again. So I think that's something which is in the background of minds of investors. Otherwise, if you take the SOTP value combining the value of its subsidiaries which continue to grow as well as the bank, it's a cheap stock.
So what is in store, Sandeep? Let's say from here till end of the year. Are we in for the last hurrah? The rally which started ahead of Diwali, more like a happy Diwali rally, will it last till Christmas? And will it be a Merry Christmas rally also?
I think so. But it will not be a last hurrah. It will be a hurrah. So last hurrah is long way off, I think.
Hurrah for the year. I mean, the last hurrah for the year is still left, I'm saying.
Yeah, I think so. Because there's no reason why there's going to be any substantial decline. Globally, we've already seen a correction. I don't see that globally markets are going to sell off, and the same is going to be the phenomenon in India. Indian markets held up pretty well in the deep correction, but they are not also rallied. So overall, if you see year-to-date performance, many European markets are still doing better than Indian markets for the year 2023, while growth rates in India are much better. So I don't think there's any big concern for the market person.
Now let's look at something which some would say is always very dangerous when you see the tail is wagging the dog. the popular patronized penny stocks or the popular patronized single digit stocks which have now become two digit stocks, Suzlon, JP, Reliance Power. And the spike in a Suzlon in this year, come back in JP Associates, the real deal in Reliance Power. Some of the stocks have seen a exceptional gain. Exceptional is the word. JP Associates, let's look at this year performance, please. I mean, this year JP Associates has taken a pole vault. 10 rupees has become 20 rupees. Vodafone must be 8-9 rupees. That has also doubled. Suzlon is up 3x. And a lot of marquee investors have moved into Suzlon. Vodafone Idea, again, similar kind of a move. Now, Sandeep, we could look at them and say, okay, these are companies which have debt challenges. The business model is not very robust. Large equity, lot of float, and patronized by retail investors. But the grain of the truth here, Sandeep, is that some of the companies are making an attempt to fix their balance sheet. Suzlon, the balance sheet is getting fixed. Vodafone, if there's a capital infusion, the balance sheet will get fixed. JP Associates, it's trying its bit to at least take care of its current operating businesses. So do you think there is a grain of truth here, and there is a reason why some of these stocks are moving higher?
Yeah, there is. And see, all stocks cannot be put in the same category. For example, like you rightly said, in the case of Suzlon, they are trying to fix the balance sheet. They had a substantial equity raise. And the overall business might be cash flow generating going forward. The problem with the Vodafone Idea is I don't think it has any equity value, and I don't think any equity value will be there for retail investors. So these stocks participate in rallies, but I think people should be careful allocating too much money to these kind of stocks. And same with JP Assets. The good part about the rally in these stocks this year, Nikunj, relative to what might have been seen historically, is these stocks might have moved up, but their market cap overall is so small that it's not that they can in a way disrupt the overall market as used to happen historically when speculative stocks used to dominate after very big rallies, and then their bust used to cause huge pain to retail investors. These stocks have moved up, but they are still a very, very small proportion of the overall market.
The outlook on TCS with that 17,000 crore rupee buyback, do you think that was a little bit lower in terms of quantum than what the street was penciling in?
So I think buyback is fine. So they take that overall cash position and announce a buyback. But incrementally, what's going to happen is that the incremental buybacks become lesser and lesser in terms of percentage of the overall market cap. And as such, their impact on stock price tends to be limited. Nearer to the record date, many people come in to buy the retail quota, expecting a huge acceptance because the difference between the buyback price and the market price is very high. So I think that's a phenomenon which is happening this time also. Otherwise, risk to growth for technology stocks still remain. Although with the peaking of rates in the US, we are seeing a uptick in technology stocks again. But the dynamics of the behavior or the business dynamics of many of the technology stocks which are moving up in the US and the Indian tech stocks might be different. So I think we'll still see few quarters of uncertainty before these stocks become big outperformers.
Sandeep, did you observe that big announcement by TVS Motors on Friday saying that they have entered into an arrangement with the biggest distributor of two-wheelers in Europe? The stock shot up 4%, and some part of the street is also looking at the way Ola Electric is gearing for IPO, saying TVS also houses almost 2/3 of that size business. But is the entire Ola Electric is being valued at 6 billion and TVS is available at 45,000 crore. Would you buy that argument?
No, I don't buy that argument, but I think TVS is a company which has been doing well. But its valuations continue to surprise me because it trades at a substantial premium to even Bajaj Auto and a very huge premium to Hero Moto. So irrespective of they have given margin guidances in the past, which they have been finding it difficult to meet. And I think this Europe penetrating the European market is not going to be easy. So I think it's a company which has been on the stock which has been on a tear. It continues to do well. People continue to believe in the future, but I think the valuations are really extended at this point of time.
Now, there is a very interesting report from Citi which has come, and they are talking about internet traffic. So, decent festive trends. E-commerce, Android traffic up 28%. We'll get to the details of this report. Payments, UPI transaction value up 42%. Food delivery and quick commerce, Blinkit traffic doubled. Zomato Android traffic slightly lower, largely because of Shraddh and other things. But Zomato has guided for a single-digit quarter-on-quarter growth in Q3. Sandeep, a lot of the so-called excitement which was there in festival stocks, food delivery stocks, small-time retailers because of Diwali and because of World Cup, now both the events are behind us. Do you think this entire theme of India will watch more and consume more and eat more and travel more, now that in a sense could be a peak for next 2 quarters?
The fourth quarter, as it is weak for all these things. This quarter tends to be strong, right up to Diwali and also going into the new year, as year end tends to be of holidays, etc. So travel and hospitality will do well, although eating out, like eating in, etc., might subside going into December. So overall, I think trends are fine. It's as the inflation gets controlled, we'll see consumer demand again come back, and I think that's a trend we should again see in 2024, which could again aid economic growth.
Sandeep, RBI guidelines are very clear that they want the unsecured book to go down. Now, banks are growing because of unsecured growth. The personal loan category is growing almost at double digit, even on a high base. When the regulator signals something, this could be a larger thought from the regulator that they are not very happy either with the growth or with the level of compliance which has been followed by the banks. Do you think one should avoid into NBFCs and banks which have a high exposure to unsecured loan now?
Yeah, they should, because RBI might have more data than us, so they might be seeing trends of delinquencies building up, which are not yet reflected in the balance sheets of many of these NBFCs. Large banks will not have much impact because the book tends to be very diversified. So I think the personal, because see, once you take a personal loan, where it's going, you don't know. But in terms of like a durable loan, etc., you know what it's funding, and to that extent, that's fine for economic growth, and that's also backed by the asset. So yeah, we should be cautious on NBFCs specifically, which have grown very aggressively on the personal loan and secured side.
Surprised, Sandeep, that given that Reserve Bank of India has rapped on the knuckles for Bajaj Finance, the stock after this kind of a news for a stock which is expensive, which in a sense has always commanded, a numero uno premium, despite that RBI diktat, the stock did not crack.
Yeah, because they just did a fundraising at I think 7250. So typically after such fundraises, the people who have subscribed tend to become buyers around those levels. But then the company cannot claim that. First, if you are claiming that new business segments or growth areas which you have started, there'll be big drivers of growth. And then when RBI puts a stop to that, then you say that it won't impact us too much. Then the impact should not have been on the upside also. So there will definitely be some impact, and we also need to see the impact of, like, they have been the most aggressive growers of in terms of balance sheet over the last couple of years among any financial. So what the impact of possible like say deterioration in asset quality will be on their balance sheet, that's also something which will become clearer over the next 2-3 quarters.
Have you looked at these two IPOs which are starting this week, Tara Technologies and Irida, the renewables NBFC? Apparently, it's creating quite a lot of interest among investor community. Have you looked at them?
Tata Technologies, yes, because it's cheaper than most of the other listed comparable companies, and it's the first, I think, reasonably priced IPO I've seen in a long time. So I think that's a good one. The other stock I haven't looked at because renewable funding NBFC only NBFC is NBFC. We need to look at valuation. I haven't looked at it closely right now.
Thanks so much, Sandeep, for joining in on the show and sharing with us your outlook on the markets.